Tuesday. That's right, it's the Korean one we're going to be talking about, but we've got a lot to tell you about. Boy, what an interesting last week it's been, hasn't it just? What an interesting last week it's been, and it rolls on and it rolls on. The aftermathing and the tossing and turning. Is Jay going to cut rates? Do an emergency cut rates, or is he going to stand back a little and watch everybody stress a little? It's all happening in the great mix of the wonderful world of macroeconomics and trading. And here I am. I want to make sure that you and others have an opportunity to potentially benefit out of the great game. And for that, I'm going to take you up and away to a very big time frame. Let's go to the charts. Let's go to the charts and get straight in it. What has been going on with the great trade, the longest trade of them all in terms of HVF method, hunt volatility funnel method, trading the best setups that give you an asymmetrical gain. An asymmetrical gain, let's get the right one. Let's get one with some history, shall we? Versus a very tight stop. That is how you build wealth and have higher probabilities of outcome than that which is implied by the risk-reward ratio. We have in fact called for a halvening, more than halvening of this currency. That's right, that is huge, by the way, on FX terms. This is not crypto. That is absolutely huge. Let's just take some of that eyeballs off. It requires large events. And by the way, you have had large events before on the South Korean one. It has indeed occurred, and I'll give you a few examples. Here was one. Way. Let's do it with Fat Koki, shall we? Let's get Fat Koki on, and our favorite color. You know what it is. And over there you can see, right about the Asian crisis, a major move. You were in and around here in sub 800 levels. Next thing you turned around and you'd actually traded almost 1900 levels. Well, through the 1800 levels. Now that right there was a larger move than a halvening. It went slightly beyond double in the USD. Remember, base currency, number one is the dollar, and the how many ones it buys you is the term, which was 800 odd in and around 97, and then poof, pop goes a weasel, and next thing you know, somewhere during 98, halfway through 99, it is absolutely moonshot, and it is now 1800. Now that means the lifestyle of the South Koreans were cut brutally back down. But then order was restored by the central banking cartel. Everyone was working together. Do you think they're working together today? This is turning everyone into their own boss, everyone for themselves. At the cost of others, if it saves them, this is what they will do. The other fairly sizable move saw 900 up to, you guessed it, 1600. Now in currency terms, that is also huge. It started in and around the 2008 mark. Yes, Lehman Brothers, oh dear. South Korea doesn't get well served when there's debt crises at all, does it? No, and that too is a substantial move. You went from 900 and you were tapping out at 1600. That's about 700 on top of that. That's about an 80%. You can call it 75 for want of the mathematics. And actually, it's been a while. In fact, we had a little bit of a yen crisis over here that did a little bit of that. We had, of course, the 22 period. The 22 got kind of choppy after the CV19, the inflation being transitory. Remember that? Remember that? I am watching you, by the way, on the comments here, and I am asking you also, tell us where you're checking in from. It's that time of day. For us, it's 3 in the afternoon. What is it for you? Where are you checking in from? Is it late evening? Do we have any Americans in the room yet? Where? What county? How's it all looking? What do you think about the tariffs? How's it going to turn out? How's it going to turn out? Is tariffs going to be the sole driver of this potential move if we turn out to be proven correct? Or will it be anything else? Will there be a little bit of North Korea, South Korea? Will there be a little bit of China forcing them together or annexing or doing something? Who knows? Who knows? It might not just be Taiwan and Hong Kong that get brought into the big old plant, the big old workshop. Who knows what happens? You know what communism is like. And they certainly can't be any less totalitarian, less economic hitman than the good old US of A, under the guidance of Mossad and ADL APAC axis, of course, it must be said. It's not typically American citizen attributes, is it? You see those two hammers, fine friends? This is on a quarterly basis, 3 months. This is about as big a chart as you see me get. I'd love to do annual and decade long. We just don't always have enough history on all of this, but this one we do. And of course it had a very good squeezy in of its own right. Way back then, you saw it there, and we've shown this many times before on previous editions of Seinfeld. That's right. You saw it here. Only we're funnier than Seinfeld, I would say. Wasn't they for... anyway, they relied on this as your big squeeze on this macro. And this is a running break. In fact, I'm going to tidy up my filthy face there with all the blue and pink, and I'm going to draw it with our draw tool. That's right. Community members have access to this after they have done all their quizzes, got smart and sharp and done a few managed draws, polish on, polish off. You've got to do a little bit of polish on, polish off before you get your black belt and all the make easy stuff. And this is exactly what you will have in terms of that. Let's get the draw tool on. If it's going to play games for me, you know how these things work. Yeah, let's turn the lights on. Come back. Here we go. The problem when you run too many blotters at the different charts on TradingView is that you have to keep resetting and saying, hey, I'm playing with this one right now. So I might just have to do that. So what do you think the main driver is going to be? Is it going to be the tariffs for the Korean one? Is this it? Or will other things feed into the mix to help the moon of the entire story at a later point? What do you think? I'm interested to hear. Let's go and see if we can get that draw tool to lock in. I think it will this time. There we go. So what am I drawing here? Well, I'm drawing for you the unique setup for a quarterly per candle, 3 months, one candle. That's a long time, guys. You're looking at something that started in the 80s. Way back there in 1981, up move, down move, secondary up move, secondary down move, squeezy, big blow off. So in fact, our high one, which is epically high, it's right up at 1900, is some way all the way back. Even if we take it from there, it's October 97. That's a long time ago. 3 onto 25, you're at 28 years at minimum. And I would say the breakout to the upside really started back here. We could backdate it a bit more. But anyway, it doesn't matter. We don't have to get into pedantics. This is what we feel is coming. You see that? You suddenly start reframing the chart and you see the possibility of those bigger numbers. And by the way, this is the biggest crisis in FX crises that we see coming that has probably ever happened in our globalized world to date. That is why I also say that number can be smashed. Look how it melts up. That target was super overperformed to, by the way. That one right there, that was a super overperformance, bang, right up there. Wow. So you could have the same again. This could be a rainmaker trade for those that are correctly positioned. It's not the easiest one to find and get on. Let me make this log scale and pull it all down. That compresses everything a tiny bit. But it shows you what indeed is possible. It looks a lot less daunting to go. The blow off could run you who knows where. So we would do a partial closure at in and around the 2,740 levels, and we'll watch. So I'm going to be showing you something else that goes hand in hand as to why I think this is a rainmaker trade and why I have high probability on this one, given its extreme reward. Now, if something's going to give you 20 to 1, 30 to 1, if you optimize really insane 100 to 1 possibilities in risk reward ratios, why would it surely shouldn't be something that has a high probability of happening. And the fact of the matter is, it has much higher probability of happening than that which is implied by the risk reward ratio. That is the key thing. Something big is going down. Something big is going down, and it's started, and it's been brewing, it's been grinding up, the people have been getting ready. That is your triggering event candle, by the way. Pop goes the weasel. I'm going to just switch the light off again. You see that one here? This one, bang. That was your triggering event candle. It ran the third high. This is a very strong third high after grinding up. And then you went into a hammer. You came back and you revisited the funnel, the green line, and you got bought back up. Then you came back to the next candle. Remember, these aren't small candles. These are quarterly candles. These are quarterly candles. That was, of course, the quarter of January to March. We have only had a little of April so far, and I don't think April finishes like a hammer. I think it has that dip down like the hammer again, and then absolutely throws it up. In short, it could really be already at our first interim, which would be 1581 on FX. That's a huge move. It's a huge, huge potential move. So that's what we're getting. How many of there are you, by the way? We are seeing top messages, 90. 90? Are we missing everybody? Is that right? Where is everybody? Are you here? Where are you from? Let's have a look at the comments. Rainmaker trade. Yes, he likes the term. Something big. Yes. Do gold versus the major currencies. Well, the key, someone mentioning gold. The best trade, of course, is gold Korean won, which will be gold dollar, dollar Korean won. Okay. You're going to battle to find somebody who's going to give you exactly that mix. Here's the key chart that I really want to show you that just makes me get sweaty palms. The palm does go a little sweaty. I'm in the presence of a beautiful lady. I go a little trembly. That's right. This is what happens when you have the split screen and you compare it to the Kospi. And I'm going to put it also on the same quarterly time frame. So that means, again, candle, 3 months. Let's do it. Let's do it. I want you to spot with me interesting things. I want you to spot with me interesting things. Let's clean our face a little bit. There's the original setup. Do you see here how Korea is a flight capital nation? It's a bit similar to South Africa in that sense. You know, people used to buy the shares and then the politics would go bad. They would dump both the shares and the stock market would go down. But then they would take their money out the country as well. And you would see the rand currency drop as well. Korea has that same dynamic, minus the crazy politics maybe, or politics of a different kind of crazy, let's just say that. So log, let's go log. I want to delog this so that you can see it in more simple arithmetic mode. What you'll notice is big move up in the Kospi, typically associated with strengthening won, USD Korean won down. That means your dollar buying you less Korean won. That is strong 1 weak dollar, although it's probably not a dollar story because, you know, the dollar is much more diverse and being compared to multitude of currencies. And Korea does export a massive amount to America. We'll come to the interesting narrative in all of this in due course. We definitely will, because there's quite an interesting story that I would like to show you on that very point, which we'll have a look at in terms of the trade, the tariffs, and what could indeed be going on. So let's watch out for that. So here we go. Big moon shoot in the loss of value of the Korean won. So dollar suddenly buying you a whole bunch more. You see the sell-off in the Kospi. Big sell-off in the Kospi, by the way. You've got to remember, this is long time charts. You were at 1,153, and then you're 500. That's like a 66% devastation. So these aren't small moves. To everybody who thinks that this is small beer. You had the 2008 run up in the USD Korean won to 1,600 from 900. You had the capitulation back to funnel. So let's also point this out. You actually had an upside beautiful trade for Korea. We're not bearish the Koreans. Why the poor Koreans? Why beat up on the Koreans? They're nice people. They don't attack nobody. They don't bomb anybody. They don't sign peace agreements and then start bombing people again. That's not the way of the Koreans. Why am I so mean to Korea? No. They had a great period. They had an upside HVF. A beautiful one. Let's just show you that. It's not always been bad. I'm just telling you now it isn't going to be good. We aren't black-pilled anti-Koreans. South Korea, look at that. Beautiful target make in the end. Long time coming. It had to live through the 2008 a return to the funnel, and then it grinded, squeezy, a little bit of a up, oopsie, CV19 brought a dip, and then the finishing fundamentals of CV19, bang, you just made a macro, multi-decade, upside HVF on their stock market. Great, but what's happening now? Well, since closing that trade for being long the Kospi, you have spilt from around 3,300 all the way down to around here, which is not much above 2,000. Let's get the real numbers exactly, a little more accurately. So the low is 2,134. That is a big rejection from its high. The high was 3,3. Now you're 2,1. That's a third, guys. That's a third. So post CV19, after the fundamentals liquidity went away, the Korean market lost a third. Then what did it do? Let's leave the quarterly and go down to the monthly and have a closer look at what's gone down. You can see the blue lines always replicating the red lines of the indice. So we've been in a flag, a bad flag. This is typical recessionomics, by the way, stagflation. The buying power of all currencies going down, but there's no real spunk in this index to go back up with anything meaningful. And because of the devaluation of money, it's going up somewhat, but it is really not very firm. Not very firm at all. Two big shooting stars. One inside the other. Sell-off wicks. And now the break on tariffs. Tariffs is the triggering event, the re-engaging triggering event of the basing ascending grind line that you had there. Bang, you broke it. That is a flag, you go down. Simple flag anonymous, he says, coining a new phrase which he thinks should become part of the Oxford Dictionary and technical analysis lexicons the world over. Triggering this flag does bring us down to the low there. And if we were to put a bull flag projection, so those of you that are aware of flags, let's make it a gray line, shall we? Let's make it log scale as well. Log scale. Well, we'll leave it arithmetic. Log scale, arithmetic. Big time frame, we'll go log scale. This will make it smaller, by the way, not larger. Smaller, the downside. So that could see you down there. Now, if we went arithmetic, regular, which I think has possibility of occurring, you can see even at a flag level, 1714.96, you could in fact be right down there. At the moment, you are 2,333. That's just on a flag, by the way. That's just on a flag. What is happening at the same time? Remember, on the big quarterly time frame, not perfectly, sometimes the one a little bit before the other. You see here, this was July. I've tried to line them up properly. July, the stock market started its pull down. It literally was at the top. You were actually at the bottom a little sooner here. You see that? A little sooner. But you didn't do too much. You sort of limped up and you really started going up then. So you can see they're very closely aligned, but sometimes by a small amount, usually within a month, one leads over the other. Right now, two shooting stars, and now they're not typically at localized highs, but they are of the shooting star structure, in other words, of this move up. It's not significant a move, but they've been rejected on the monthly twice. And then the green turned to red, and now you have a triggering event. Flight capital, sell the Kospi, dump the one. Take it back to USD, to gold, to anything else. People aren't buying Samsung shares, LG shares anymore. Great products they may be, but if they can't sell them to the same level because of protectionism, maybe market share gonna shrink. And with that, the currency and the Kospi. What did you get on the USD Korean won? Well, initially we had a lot of the money running into gold, but look at all those buying wicks. Every time you've come down, you've been bought back up. Low, slightly lower low, failure to make a new low, Hammers, hammers, hammers. Start with a red hammer and a slightly big body, then a small body, but green, a slightly bigger green body, and a longer wick and an even higher up body, but still small. You've just actually had at least 3 hammers. Some might make a case for 4, but at least 3 hammers, all supporting on this level, our RH3, just-in-time entry, on a macro, multi-decade, HVF long, calling for well in excess. So the target to be made with an overshoot run on the Korean won in a blow-off contagion that will be very damaging to the wealth of South Koreans. Who has South Korean family? Are you South Korean? Any South Koreans? Anybody in South Korea? Calling. My South Korean market sniper friends and followers. Are you here? Who is living in South Korea, or is South Korean and living somewhere else, or is South Korean in South Korea? Let's see. Anybody present? What would be the entry for the USDKRW? The entry is already triggered on the macro. You should already be long. Our community members are already aware, and many of them are already long with the green line. So when I take you back to the other chart, entry is 1445.8. You are already long. You are already in the money. You are in at 45. It's 76 now. You are in at 45. It's 76. You've got 31.1 already banked in the key place. Remember to book a call. You too can learn why. Why do we do a just-in-time entry at the third? Why do we enter early? Where do we place optimized stops that can give supreme rewards? Let's just do a little bit of risk-reward ratio work with you. Had you bought early when this started to move up, you could already have your stops, as I have with mine, moved up to below those hammers. Let's say you just bought at the just-in-time, the 1445, you could be just below those hammers. I don't assess those hammers will fail. Let's say you're watching now and you think, damn, the bald man is onto something here. I should be in this trade and am not. So you buy at market right now and you put your stop loss under the slightly deeper first hammer rather than the other. Remember, those are quarterly hammers. That's 3 months. 3 months, minimum 28 days, possibly 31 days in a row. And you're taking the one before the one that's finished in March. You're taking the quarter that started October, November, December 24, and you're taking the lowest point of that. And you are already then doing that. You will be looking at a 24.5 risk-reward ratio. All you have to do is shut up and not do anything and watch the news come to you. Can you do that? Can you get an exchange, open an account, fund it, ignore it, forget how to open it, lose your password, do something, and leave it? Can you do that? With a size loss, with a stop loss down there, and then put the take profit for at least 50% thereof at 2,740. And then leave the rest on for a possible blow-off, 3,800, maybe 5,000. You can stagger it. You can come back when you're deep in the cash and play the market for the closure on the exits. Would you, could you do it? We're giving it here for free to you, and we've been telling you about this opportunity for about 5 or 6 years. I've been following this particular setup, and it's come now. You're showing up, and the party's been built. All the sets have been done. All you have to do is show up and drink and get laid and have a great time. Everybody else has bought the island, built the house, put in all the plunge pools, got all the drinks in the bars stocked over the last 5-6 years just for you to show up for the main event. Yep, that's it. Aren't we nice? Yes, that's why you're hitting the like right now. That's why you're booking a call. Some of you will make the money and afford your way into the Market Sniper community as a result of this. And by the way, I do think it overperforms. It could overperform that you could be looking at a 50 even. When last did you get a 50? Well, look, I can't write checks about that. I don't know. But let me just say, last time what happened, the target was 1/3, about 30%. Remember, this is a log scale. That's how it looks. Unlogged. That's about 1/3 of the total move. It might actually only be 25%. From there to there, you could get at least another 2.5, somewhere between 1/3 and 25%. It overperformed. Now, that doesn't mean it's going to do the same, but what happens is when people don't want one, they want out. Rich Koreans who have offshore bank accounts, they're going to dump. Just like you saw the euro Swiss franc for Europeans, Germans, and everybody else do dumpermentals. So you will see a change and pivot there. So it could be incredibly sexy trade for many. But the key thing is you have to be able to adhere to a process. And that is harder than it sounds. And that's part of the learning that you will get when you book that call with us and start your journey on wealth building, capital preservation, and of course, buying yourself your freedoms that you need to get optionality in an ever more totalitarian, draconian, end of current economic cycle times. And your traditional financial advisors are not giving you the true tools you need to get through this. And by the way, this will buy you many a gold ounce, which in of itself will buy you even more capital preservation and quality of life in the times that lie ahead. Let's have a look. Does anyone have any questions on the Korean won? Someone thinks gold will come down to 2.7s, maybe. Isn't it too volatile of a macro for such a tight stop? So it's a fair question because the value of this is that once you become single-mindedly in one direction and nobody is wanting to make large one investments, you're at that precarious Mexican standoff point where the much faster draw is about to kill the slower one, but it hasn't yet kicked off yet. And that is a very opportune moment to get in because you're still paying the alive price for someone who's about to die. Or should I say the other way around, you're paying the dead price for someone who's still going to survive because there's risk. The fastest gun wins here. This is a dollar bull call. It's important to understand that, but it's part of the debt-based collapse, interest rates, and many other things. That 9 trillion to roll is not going to allow rates to do anything near as much as people expect. Little reminder of the 10-year. Head and shoulder collapse, gap down, being pumped right back. It's even past our neckline right now. It's going to be hard to get those rates down to target. I'm not saying it won't happen. We've drawn it. We think it's got decent probability, but I don't think you go much lower than that. Why? 9 trillion. 9 trillion to roll. I don't think anybody's ever rolled a sum anywhere close to that. I would love to know. Someone put it in Grok or one of those things. What was the highest volume of debt that ever fell in a single year that had to be rolled prior to this year? My goodness. That is an absolute 9 and 12, 3 times 4 zeros, guys. Good luck with that. There's very few people. There's, entire billion-dollar corps. If they invested everything they had in treasuries, there wouldn't even be a rounding error on what has to be put out. Just think about the scale of that market. This whole thing could turn, the head and shoulder could fail, and this could just start mooning. And who wins? Funnily enough, by virtue of design and debt-based collapse, the Chinese treasuries would devalue horribly. The Japanese treasury holdings would devalue horribly. The interest rates on the dollar would start climbing very fast, and the dollar would get very strong. You would get higher rates on your dollar. So if this fails, which it could do, just because you have a pattern doesn't mean it has to win. If that fails, we go into debt-based collapse. And the 9 trillion is just too big a number. They try to birth this elephant. They're just too small a uterus to carry that. Okay, so there you go. That's where we are on rates. By the way, some will ask about gold, so I'll give you an update on it. Marginally lower low. So let's also just remind everybody, we did say the 2.9 level is probably a place of some pause and respite. You could go on and finish the 3,000 and then you rest. We have actually made a very strong 3-1-6-7 high, and you've sold off now. You've made two big levels. Our target, the flag of this massive 3-year continuation pattern. This fella, which you broke out here. This was a golden moment, guys. How many of you appreciate that we went live and said at this time, that risk reward is still there? I've just drawn another one for you on the USDKRW. Are you going to be one of those guys looking back and saying, hot dang, if only I'd done something? This is non-advisory, by the way. You've got to decide what you want to do. But we rode that long. We were investment long, and we traded long only during that period. And you got a setup. You had an HVF to start it, and you had a final HVF to finish making that target before you got another sell-off period. And actually, this is a little bit of a hammer, potentially. Gold goes a little bit higher. It might not even pull back much. It might not even pause that much. So it's far from a big issue, this recent events. It's done an immense amount. If you look at this point here, in 2023, you traded a low in 2023 of 1810. 1810 in 2023, that was yesterday. You've gone through 3,167 since. That is phenomenal performance. Phenomenal. Let's measure it, actually. This is obviously the best. I've taken it from the absolute low. We can take it to where it is now. 66% up, and at its high point, it was 75% up. Think about that. And we came on and we told you here on the HVF that you're not long enough metals. That was a 50% call, and to the high point, it was a 57% call. Nobody sells the high. We know that. You know that. In fact, it's going to go higher still, and this trade is not closed. It's just you might have taken your leverage off once you made the 29,300. So gold looking great. Are you hitting the like and heart buttons? No hearts. No hearts and loves and likes. Top messages. Let's have a look. See how many of you are on here. I might have to just mute this volume first because the hand thing is saying 90 people. Can't be 90 people. How many are you? Where are you? Where are the Americans? Where are Danes? How do you feel about Greenland? Danish people, 590 watching. What do you say? What are you saying? Is it right that you're going to have your island taken off you? This is much better for seeing the comments. I prefer it. I sold Bitcoin at 101,000. That was a good fill. So we've also warned the crypto guys, not for this channel really. I don't want to go deep into the weeds. We've been getting friendly super chats. We don't even ask for them, and people have been giving them to us, very kind. But we warned everybody to get defensive there for quite an extended period, with a lot of hate that went with it. A lot of hate that went with it, but now a little bit less hate and quite a bit of appreciation. Greetings from Germany, Stefan Chung. So we will be in Frankfurt, and we will make time to see you. So we will be attending Saw Financial and speaking there on the 15th and 16th in Frankfurt, Germany of May. That is a month not too far away, I'm told. I think the people that run my diary say something about that. And then June, at the end of June, the United Kingdom in the Hertfordshire area. So those who attended our event there, where we streamed from the pub and we had a chat, we'll probably do the same place, same time. Either the last few days of June or just into July. So there will be a week bracing there where we will be there. If you're in the United Kingdom, look out for us. If you're in Germany, look out for us. And then, of course, Georgia. We might not have 1 million Georgian subscribers. I'm not sure. But we will be there too. So if you want to come and see Georgia, one of our key elements of our reset planning and optionality to help you preserve capital, have great banking options, and a lot of other key parts with great partners that we use ourselves and have done for many years, hard proven. You want to get your hands and access to that and see how those things could support you in a time where the Europeans, oh my God, is there anyone more vile than this von der Leyen woman? Is there anyone more? She was telling how about Talmudic, how Europe is striving to be more Talmudic. She actually said that. I was like, no, come on, this is AI. Someone's pulling my leg. This can't be true. It's like, okay, that was really interesting. She's going to be using your private savings for the military-industrial complex. How about that? That's the standard way. They say, we need a corrupt vehicle that we can steal from you, that we need to convince you we need to invest in so we can steal from you more. It's all bungs, brown envelopes, and a lot of other things, and obviously cooperative banking structures and various other needs and techniques. And when, of course, they go wage some war and they mint some children. That's what they like. They really like it. That's who they want. So she wants your private savings and your pensions to be captured into this. It's unbelievable. And they said October 25, we'll be talking about this and more when you come and see us in Germany. So that's gold. What else are we talk about a little bit? So we also warned that certain things could sell off. We had a community update, and one of our ladies in our community was pointing out how we warned coffee would turn down after meeting a lot of targets, and you can see how the volatility has increased. So this is generally a risking off. So you've had some soft sell-off. New York City, yay, NYC. So glad to see you. So there's a couple of markets that are all a little bit risking off. There's, of course, the beloved Ethereum, which is the worst token of the alt season that made a downside target. We did a little draw for our crypto bros there. And then we want to talk about not just gold, we want to talk about the gold and oil. So if we talk about gold and we divide it by the great oil, we've also on this channel, we told you a long time ago, the oil short is coming. The oil short is coming. It's very similar to CV19 vibes. That makes me wonder, will they try pull something very similar? I don't know, as a second tier leg. So this is a reminder, and we've told you before, the events of CV19 that were unbelievable in terms of overall performance when we said on the stage of the dollar vigilante, that video is still somewhere up there, there's short clips of it, go long gold, short oil. Oil could potentially go sub 10 into single digit territories that traded naught. We did that there, and this was your run to targets that actually so incredibly, for those that say overperformance, show me one time anything that's overperformed. We get cynics and skeptics. It's a probability game. We understand. This is called overperformance, by the way. You see that? You see that spike? You see it up there? It's actually, it should go to 1 million as far as I'm concerned. It shouldn't have a top. But anyway, where are we today? We told everybody, short yourself. Hey, with not very big account, you could have shorted $100,000 of oil and longed 100,000 of gold. And we told you that around about the time at 27, and you've got a return move here to the 28 neckline. You could have done that where 1 ounce of gold was getting you 28 barrels. By the way, I messed up with my maths. Thank you for some of you guys in the comments. I was saying 531. I didn't make it clear. That was in Australia, in Australian dollars. Everyone was like, some guys ran the maths and they're saying, you paid $531 for a 20th of an ounce? Aussie dollars. This was born in Australia. It's an important detail I didn't provide. So well done to all those that did the maths. I'm not telling you yarns. I'm just wasn't clear enough on the dollar because I wasn't specific and remembering, in fact, that was the Australian mint that I was in, and I was paying Australian dollars. So good on you guys. I like people that check the numbers. And of course, they force me to clarify, which is right. We strive to be accurate. Australian dollars. So this is a real moon, guys. And these targets are soon to be made. So let's just be clear. We get plenty of things wrong all the time. And you need to be humble because the markets will crush you. So let me say that up front. But in terms of what we've put out here, you're looking at this USD Korean won trade and say, what's my chances? This is what we've given you. And this is how it's doing. And you should see what the guys in the community are getting in terms of specific equities and everything else. We've given you this trade and this is how it's performed. It's about to run the conservative targets over here, and it's absolutely melting up. Why is that? Because gold has continued to go largely up and oil has been flat and now largely down. with a bit of jiggy along the way. It didn't go south as soon as we said it. It didn't. That's not markets. We can't tell you to the second and the time. But we said, here's how you do it. That you don't have to worry that you're not on the moment with the oil collapse. You put it on short and you put this on long. And that's how it's worked for you. That is how it's worked for you. And even then, if you did it here, you still would have had a spell where you might have thought, it's not doing that great. Well, it was. It was doing pretty damn great, but it wound up for a while. Now, it's absolutely ripping. It's absolutely ripping. Less goods, higher cost goods, less consumption, contraction in the world, less consumption, less deliveries, less oil, less purchases, less oil for packaging, less oil for everything. Oil is the Rockefeller tax on a strong economy, a growth economy. When we had subprime, just before subprime, when everyone was making gazillions on their house, oil was at its peak price. They could skim. Everybody was rich. Post subprime, collapse all the way back down to the 20s, from $150 to the 20s. It's a thermostat tax. It's your first global tax, the cost of oil. It's like a global tax. When everyone's feeling rich, it's high. When they crash us, when they wreck the economy, if it's more recessional. We've got to talk about this. Lowell Finkelstein, that is Larry Fink for those of you not in the know, says, yes, I'm talking to CEOs and they say, well, we've been in a recession for a while. Oh, Lowell, how nice of you to say that now. We've been saying it for 3 years. 3 years, 3 years. Yep, and in fact, the only reason you didn't have a recession was employment, and the only reason you didn't have unemployment is because Biden was doing statist recruitment and contractors to the state based recruitment on a splurge of money and expenditure that left a huge debt collapse invariably guaranteed to happen thanks to the previous administration and all those administrations before it. So this is a key thing. Let's show you some of that stuff back on the Korean one. This is Typefully. We're going to be releasing this as a thread later. So as a follow-up to this, key points on the storytelling side of the Korean one. So the three Asian powers just broke tradition. They aren't friends. Japan, China, and South Korea have a patchy history. Some will know, so they are natural friends. But the tariffs see them think, okay, maybe we need to trade a little more between each other, which is a lot closer. There are neighbors, just like America does with Mexico and Canada, etc., etc. So he's actually pushing people together. In the same way Biden forced Russia into China's arms as an allegiance by letting Granny Yoda Yellen, the little poison dwarf, take 300 billion of Russia's money on the SWIFT system. Well, that was a great idea. They literally married China up because China worries about the same happening to them. And Russia says we need a system with other big guys that isn't part of the system. In that same way, the tariffs play card is an isolationism. It is the putting up of a wall to a degree. It is bullying. It's the last dance where you're still trying to bully people for their lunch money. And you ain't as big and strong anymore. And some of them are sizing you up and going, what if I just say, could I take you? Or could I get a few of my friends and we take you? That's where we are. April the 2nd, Liberation Day, 20% tariffs on top of already tariff Chinese imports, by the way. So that was a new, and 25 on Mexican goods and Canada. So that had a lot of NAFTA in it. Three nations with centuries of tension are now becoming friends. 24% of global GDP, the world's largest semiconductor production is out there. 3 of America's top 5 trading partners. And they've decided to work together. Is it a seismic shift? You better believe it. These nations have been rivals. Japan colonized South Korea. They had comfort women. Any ladies in the chats that are volunteering to provide comfort to me? I understand it's quite fun as a man to have a few comfort ladies. I love the phrase. I did a couple of comfort, maybe a few concubines. A man is having little urges and all. Oh, yes. Wasn't it lovely? They're banding together to protect their economies from US tariffs. So they have quite a a sketchy history together, but now they're getting closer and collaborating. When you apply market pressure, you create a volatility funnel that suddenly has a breakout. You have a squeezy and a sudden surge. And that is what we are saying is about to happen on the dollar and the Korean won in slow motion, you understand. It moves slowly, like how Ernest Hemingway went bust. And then suddenly, very, very fast. And if you aren't in for the slowly, you don't get the very, very fast. So you got to be in it to win it. That's right. That's how it works, guys. Taiwan, South Korea, and Japan control 87% of global semiconductors. China assembles most consumer tech. So there's a lot in there. 30 to 40% price hikes on devices. Samsung. Who has a Samsung right now? Who's watching this on a Samsung right now? Very, very big market share. Very big. Second is automobiles. Japan and Korea. Hyundai, Kia, Toyota, of course, Nissan, wow, Mitsubishi, many domestic cars. And the alliance means coordinated supply chain, joint manufacturing. You're actually going to make them stronger and more cooperative at the expense of yourself. They're becoming less your friend and more friends to each other. Pharmaceuticals. Korea is expanding biopharmaceutical capacities. Raw materials, they're going to cooperate. All of this is going to happen. But here's the thing. China is a 19% export to GDP. This is the little twist that many people don't realize. Now, the truth of the matter, we're going to come back to this, is it's a little bit more than that. But it's a 19% export to GDP economy, down from 36%. In actual fact, this hurts Germany more. It hurts Vietnam, which is 80% plus, more. It hurts Holland, Amsterdam, and our Netherlands friends far more. They are export economies. You can see it's not entirely accurate, just 19%. They're proxies, like Mexico. China's done things via Mexico to already appease. You see, this has been signaled. They've been warned this is coming. They've war-gamed this in the financial war games. And they'd already began preparing to do aspects of this. So that's why Mexico, you actually had the peso, something Ben Johnson doesn't always mention, be stronger than the dollar for the better part of 3 or 4 years, while telling how crap the Chinese yuan is. Because China put production in there to provide neighboring friends shoring close to the main market. Germany has 43% export economy. Vietnam 87%. That's why they quickly ran to America and said, hey, 0 on all your stuff. Don't worry about it. It's on us. Now look after us. Because they don't buy Ford Tauruses and 16-wheeler trucks, generally. It's about 13 billion of US goods, and Vietnam sends 130 the other way. Nike would have to repurpose elsewhere. So you see, there's a little bit more to the story in all of it. Germany is exposed because it's stuck in EU with von der Leyen. Von der Leyen. That's her name. South Korea, 44%. That's a big percent compared to China. Even if we say the 19% is, well, there's some things that are leaking outside through other countries with China. You can see it. This doesn't hurt China near as much as it hits Korea. And when it hits Korea, what happens? They sell their Kospi stock and they dump the one. Nobody wants to hold the one. They want $1. They want something else. They want gold. But first you go to the dollar on the journey to getting to gold. So a 20% tax on Chinese goods would raise prices. The key thing about all these tariffs, guys, is it raises inflation. And what does raising inflation do? It makes everything more costly, including the cheap things that you need. Never mind the luxury items. And what does that then do? Interest rates spikermentals through the US that head and shoulder might not perform on the US 10-year. You might just turn around and surge. And what does that do? The dollar gets super strong. Everybody who's borrowed in dollars offshore gets wrecked. And a highly leveraged Korean society with peculiar rental system ends up in deep, deep trouble. Light and Darkness says, foregone conclusion, 100%. GBP KRW and JPY KRW are at resistance. Could it delay the USD KRW trade? Remember, a large part of this is dollar strength as well. So we think we found the most dominant fiat and the weakest major currency. So dollar is going to be strong in that environment. How's the Euro USD? We've had a spell of Euro strength. But if the American rates, which are higher, continue. Oh, by the way, my South African friends. Hoe gaan dit saam met julle, my Opel? Ek dog dis baie goed, nee. For my South African friends, I will address you in the finest Afrikaans language and tell you that this is a rand fail too. And South Africa didn't do particularly well. You see, they're not liked by Trumpermentals. They probably said, yeah, we're going to hit you a little harder because farmers, because you shoot farmers, because you did the ICJ against Israel. I think that's the real one. But anyway, so you're going to have probably a little pullback, but the rand is looking on the British pound to go 25.65. It crossed the 25 mark here. 25. That means if you have 100 rand, when you've crossed the 25, you get less than £4. 100 rand, less than £4. You can't get a fiver for it. And the British will tell you that don't buy you much, mate. I don't even think you can get a extra cold Guinness anywhere there. But this will pull back a little bit now because we're having a little bit of normalization. Everybody relax, and then we go again. So 25.65, you will get less than £4 for your 100 rand. So that's looking pretty weak. And if we have a look at the dollar versus the rand as well, USD ZAR, someone who is also a little bit exposed to dollar borrowings, I understand, a bit like Turkey. Turkey won't be enjoying much nowadays. They are the basket case, but it's a very difficult one to trade because the rates are so high. But you can see the rand is heading for a 20 again against the dollar. That would be a new high of the modern era, I would argue. I don't think we have anything before. By the way, does HVF method work? Oh boy, oh boy. A legacy draw. I was, funny enough, just highlighting this. This is the rand's loss of value to the dollar. Bang, your target there. From this squeezy, low slung one long time ago. So for those of you that think, I don't know about this guy's cranky old method thing and this volatility nonsense. You would have had a couple of tough times. You made your second interim, you had a proper pullback. But at this point, you are deeply in profit. If you got in on the axis. You also had, we didn't make the target, we had a big sell-off. Support at the second interim. And then you got to make that target. But we are looking like we could go maybe to a new high, possible, against the dollar. So the rand is in trouble. But the holding costs on that are quite a bit higher than the interest rates in Korea. It is not a first world currency like Korea is. There's no Samsung or LG. There's fruit and gold and, bits of iron ore and coal, which is not quite the same as chips and white goods and accessories. Okay, guys, that's it. I think we've chatted for a while. Are you ready? Do you want to start? Do you want to build money? Do you want to build wealth during this period? I'm saying to you, you could come out of this and it could be one of the best things that's ever happened. There's going to be some people that are going to come out of this event and they're going to feel like many people felt after the CV-19 lockdowns. Dazed, confused, feared out, stressed out, short on money. And there are some that just won big. I mean, our YouTube channel exploded during CV. In weird ways, many things were very, very good for us. I'm not taking glee at the horrific state of what happened for everybody else in that environment. It was terrible. It's still terrible. I still rant about it with real anger and venom. But I can tell you, I was well served in many ways by those events, just because I was in a position to maximize. And thank you to your support and sharing, we got a lot. You're you're going into a process where it's not necessarily a CV-19 event, but it might be of what's going to go down. And you could be part of those that come out better, wealthier, more capital protection, stronger, and healthier mentally. Because actually, if you're winning and you start winning, this is a great process that actually liberates you. Yes, Liverpool guys in the house. Yes, the red men are going to win it. Looks like the bond vigilantes are out. Yes, there's a lot of volatility on bonds. Think about what I just said. There is a real wealth building opportunity. The irony is, in major collapses, wealth comes at you even faster if you are correctly positioned. It is ironic. It isn't fair. It's a speculation society. There's counterparty risks and everything, but they are going to profit immensely out of it. They are going to take from you. You can decide to be part of and the people that win out of this process, or you can be passive. If you're passive, you're being battered. You're going to see your currency lose power. You're going to see your pensions lose power as a result of their exposure to debt and collapsing stock markets. You're going to see a lot of things go wrong. I've given some ideas of what you should be doing. Gold, obviously, a large part of that. I've said when you should pivot back to silver, and you can start accumulating silver like a banshee. We'll deal with that, and we continue to update on that in the community. And also utilize the cryptos. There will be big pumpermentals that'll come, but first we dip. These are all understanding the process. This is what we're all about. We want to help you. It's time for you to help yourself by doing the necessary. You've got to engage with us. You've got to engage with us. We never send you messages. We don't do any of these creepy things on Instagram where somebody tells you to send it. It's scam. Okay? Go to themarketsniper.com. It's easy to find. I will show you. It should look something like this. You type it in, The Market Sniper, and the website should look something like this. You can have a look at the case studies, examples of things that we've done, why we put them up, how they look. The site looks something like that. You can book your free call. There's absolutely no cost. And you get a chance to look at our platforms and some of the things we do. And there's 14 days money back, no question at all. You don't even have to say why, what, or anything. You just say, it didn't work for me. It's inside the 14 days. Can you please return my money? Done. That's it. Listen, this channel's been around since 2009. We aim to deliver value to people. We're not always going to be accurate, but we're generally right. The bigger the time frame, the better we are. The setups take longer, but boy, when they come hard, and the probabilities are strong. You're looking at one with the USD Korean one. I hope many of you make out like bandits. Thank you for watching, and we will see you later on during the course of the week and as we go forward through what is turning into interesting times. The Chinese curse, interesting times. Okay, bye for now.